Hey traders, I'm Charting Man Dan with the Chart Guys, traded for the last 13 years and technical analyst. And in this video, we're going to look at where we stand after the return of volatility. Bullish CPI reaction, bears own the morning, bulls own the afternoon. What does it mean? Bigger picture? Let's see what the charts say.
All right, at least we got volume and volatility back after a very slow Monday and Tuesday. There's your CPI reaction. Both the S&P 500 and the NASDAQ hit 8-month highs, highest levels we've seen this year. Pull back on the morning, no big deal. Higher low, tightening range. Bear break, bears take some control. Bears follow through. V-shaped bounce attempt into the close. So where do we stand? Well, we're getting the same thing that we've had over the last couple of weeks, which is the NASDAQ is leading the way up. Big tech, semiconductors, they're leading the way up. The weakness is still in our weaker sectors, financial, energy, and that's weighing on IWM. The healthcare sector is still in the middle of the road. It hasn't picked a team yet. And so the market is seeing this major tug of war going on where we have opposing forces tugging in different directions. And so that's leading to the S&P 500 to be fairly choppy. So S&P 500 right now, I'd be scouting for an hourly lower high if there were more time left in the trading day, and we would look for our equilibrium as the most likely scenario. But bigger picture on the daily chart, I'm losing clarity on SPY. This is SPY right here on the daily, and that's fine for me because I'm going to continue focusing on the individual sectors where I have more clarity. But at this point, for me, pretty much SPY is going to have to break 403.74 or 417.62 for something to change, because we've been trading sideways within this range now for almost 6 weeks, and we are fairly close to the middle of it. We're $9 off the low. We are $5. No, we're definitely closer to the bulls breaking than the bears. But I'm going to keep saying what I've been saying for a long time. The bears will not have confidence for fear in this market if our big tech leaders continue higher. And again, people say it's not fair. It's skewed. They have the most weight in the market. It's just a few names holding things up. That may be the case, but those few names are still very strong. And so we look at the NASDAQ, and we can see the NASDAQ with the highest close since back in August of 2022. So almost 8-9 month highs. And I've been watching the possibility of this rising wedge, and the bulls are doing their best to negate that. And if we're green tomorrow, this will be negated for me. And you can see the NASDAQ had a bull move, a pullback, and then a new high into the end of the day. It's a megaphone because we keep breaking resistance with no follow through, then we break support with no follow through. So I'm keeping an eye on an uptrending resistance line, downtrending support line, but we are up testing resistance right now. And we look at QQQ on the daily chart. And the big thing for me was, all right, I'm paying attention to the bears after this morning with that sell-off, and the next big check mark that the bears needed was to confirm an hourly downtrend with a lower high and lower low to confirm to us that they were taking control. And they were unable to do that with the size of this bounce at the end of the day. We'll see if that changes tomorrow at all. But again, QQQ, aside from the high of today, 326.01, we're looking back at 332.51 as the next major level. And if the bulls were able to clear that 332 level, which is 2% away, that would be the highest level in over a year. It would be new 52-week highs. So those are on the table. We're knocking on the door. And again, the major lead bull generals, the most important stocks for the entire market are Apple, which is still hanging around up near its highs, Microsoft, which hit higher highs today, and Amazon, which has been relatively weaker and is trying to join Team Bull with 110.86 being tested. That would be the highest level that we've seen in over 3 months. And if the bulls could clear 114, that would be the highest level that we've seen in 6 months. Amazon divided by QQQ shows us it's been a relatively weaker name, but we built this mondo base of support, and the bulls are trying to shift into laggard relative strength. Google has been a laggard bull. Bull break was yesterday, gave a lot of it back, but here we are seeing continuation. They had an event today, and you can see the volume pouring in and the weekly bull flag confirming. So Google is getting to the highest level in over 6 months, 7 months. So again, you will not see broader market fear. You can see financial sector fear. You can see energy fear. You will not see S&P 500 fear if these major names keep heading higher. XLF. XLF tried to confirm the daily uptrend today and failed this morning. We needed a break of 32.62 to confirm the daily uptrend, and we failed by 8 cents and saw a pretty hard rejection. So the bears are still in control. Look at the lower highs here. 33.53, 43, 32.62, 32.54. The daily lower highs are my guide. I am watching for the bulls to try and shape up a weekly high or low, but today was definitely a step backwards in trying to see that shape up. So eventually, what we're going to see happen is the NASDAQ bulls are going to join Team Bear with clear weakness, or the weaker sectors are going to join Team Bull with strength. And again, if you've been following along over the last couple of months, that's the exact same statement that I was making down here when the financial sector was really weak and they joined Team Bull. And so we'll have to see how this shakes out over the next couple weeks. Wouldn't be surprised to see XLF form a weekly inside bar today, or this week, I should say, and how that breaks would be very notable into the next week. KRE also shaping up a tightening range. So the 4 hour is in equilibrium with our low, high, higher low, lower high. We broke support by a couple pennies today, but still a tightening range. If we get any green tomorrow, I'll just be viewing it as this tightening range. And I did make a long today, a long swing position, which is a small position, and using 36.49 as my stop to just give some wiggle room under that level. And the attempt was for a daily trend change to try and shape up, for a weekly oversold bounce to try and shape up. It doesn't look like that's going to happen right now, but I'm just going to let this trade play out and either stop out or not, because I am risking, I'm risking about 20% of the gains that I had shorting KRE on the gap up open Monday. So perfectly fine, willing to make a long attempt, just risking partial profit from a trade earlier this week. But for now, it's a very clear statement. The bears do still have complete control of the financial sector. Semiconductors getting real tight, probably going to break before the end of the week. Another test of resistance today, and we failed by 14 pennies. So getting real tight here. I care about 122.74 support and 125.18 resistance. Those are the only two levels I care about until one of them breaks. NVDA still hanging on. We double bottomed at the low of yesterday by 11 cents. But trading sideways the last couple of days for the most part. AMD, have we started daily consolidation? Not yet, but a bearish candle on the daily. So we're going to be watching, anticipating bulls are going to be looking to buy a daily higher low on AMD, considering the V-shaped bounce of 25% over the last few days. Healthcare, still not picking a side here. Tightening daily equilibrium. We held support this morning by 16 cents. So I care about a bear break of 131.84 or a bull break of 134.05. And we are close to the middle of the range, slightly closer to support. But we're going to see XLV pick a side here. XLV has been on the fence. They've been watching the financial sector and energy bears, the semiconductor and big tech bulls battling it out. And XLV is waiting as long as it can before it has to pick a side here. And it will pick a side within the next few days. IWM confirmed the 4 hour inverse head and shoulders we talked about yesterday, but no follow through at the moment. So we broke 175.55 and 175.70. We gave back a lot of that on the morning drop. That was a bull move pre-market. And so technically it is the first daily uptrend confirming in a while, but it's not convincing. I go to the 2-day time frame, zoom out a little bit, and recognize we're still in a 2-day downtrend. Lower high, lower high, lower high, anything under 177.34. And so IWM, if we're going to see any conviction out of the bulls in IWM, we are going to have to see the financial sector shift momentum. Biotech sector continuation today. Again, it's been the ideal shining star of a laggard sector, which did not participate at all when the broader market got its bounce going and then played some notable catch-up. So still keeping strong in the biotech sector, heading up towards 9260 key resistance. CCJ, our uranium play, continues to creep up towards our monthly resistance. Today we got within 2%, 2.2%. TLRY, daily inside bar. Cannabis sector for the most part seeing consolidation. CGC back down testing the lows. Lead bear easily. MSOS daily consolidation clearly underway. The weekly charts, that's why we always zoom out. Great, we confirmed a daily uptrend. Zoom out and remind yourself the weekly chart still has a ton of work to do. And this is a potential weekly bear flag unless we see bounce follow through. TLRY is fending off daily consolidation as our lead bull, but if we break 272 tomorrow, daily consolidation will be underway. The dollar, sideways. I only care about the dollar if it's breaking 178 support or 102.40 resistance. Otherwise, it's just sideways. And it's not a coincidence that SPY has been sideways for 6 weeks and the dollar has been sideways for about a month. Waiting for a clear break sometime within the next couple of weeks. Gold, potentially setting a daily lower high. If we were to drop down and break 1999, that would be a clear shift and a bear break of this rising wedge. Silver, same deal. If we drop down and break 2517, that's a little 12-hour head and shoulders confirming. So the metals bulls are close to seeing weekly consolidation shape up. Miners, same deal. Lower high set, break of 34.52 would confirm a daily downtrend. We held it by 4 pennies. We are close to the metals and the miners seeing weekly consolidation begin. Oil, hanging around near the high, but struggling at daily EMA 12 resistance. We're going to be watching for daily consolidation soon. Bears are trying to confirm a 4-hour head and shoulders pattern, but we're going to have to break 71.80 for the daily lower high to be set and for daily consolidation to be underway. And natural gas, daily lower high set. Time for aggressive bulls to be scouting a daily higher low, playing off the recent low to see if we can confirm the first daily uptrend in over 5 months. Inventory report tomorrow at 10:30 a.m. Eastern for natural gas will be key. We'll see. So trading today, as I mentioned, I took some KRE long, but I also took some SPXS short. That ended up slightly red into the end of the day due to the bounce in the broader market. But a little bit of protection just in case we do roll over. But that bounce into the end of the day from the NASDAQ certainly showing some strength. Other than that, took some day trades. Riot was a nice trader here. And there were so many shorts I missed on Riot. They were just very clear. I got a couple of them. But, I mean, look at this double top. That's a double top into a 2.5% pullback. And then you got a triple top into a massive pullback when Bitcoin dumped. That was the trade of the day for me that I missed. Just a very, and I even, was posting about it in the chat room. MARA, 5-minute head and shoulders. Scouting a 5-minute lower high next bounce and then distracted with whatever in the chat room. And very nice 8% follow through on that drop. And then a really nice bounce as well. Played a little bit of that bounce, but I was too chicken to let it play out. I was quickly locking in short-term little gains because of the magnitude of the Bitcoin drop. Talked about that Bitcoin drop in the Bitcoin video. Friday, I'm going to do a live stream Q&A. Come bring a beer. Let's chat informally and ask me anything about trading, lifestyle, experiences, you name it. Appreciate you watching. Do good things.
Flowers, these are edible. Anise hyssop. Volunteer potatoes, volunteer kale from over the winter. These potatoes need hilling. I'm going to do that after I record the market video. Pretty much just have to put soil up around the base maybe 3 times throughout the summer to ensure that the potatoes remain covered, because any potatoes that get sunlight on them, you can't eat them. Uh-oh. My yarn got wet. Or twine. The garlic's looking good. Planted some leeks in there as well. They haven't really come up. And holding off on weeding. Pretty much just going to take a hoe to all of these paths and then cover it with the fresh mulch. But holding out until everything blooms, or not blooms, until everything sprouts from seeds. And also there's some bunnies that live in the bushes around here, and they eat all these weeds. And same concept, if I get rid of all the weeds, they're going to start eating all the stuff that I want to eat.